Hello, it's Marc Henderson here. I'm the CEO of Laramide Resources in Toronto, Canada. I'm actually here in London today, here for the WNA, the World Nuclear Association Conference, held every year. It's a big event. It plans to be even bigger this year. We've got a bull market going on in uranium, I think, that's now kind of acknowledged by all. We have some late-stage development projects in the United States and Australia, and I'm going to be pleased to tell you about it.
Mark, good to have you over here. Welcome.
Likewise,
WNA.
Matt.
You're a bit casual, I think. You need to be seated in booths.
It's,
surely serious meetings to be had.
It's tropical outside.
Yeah. It's our second day of summer.
Apparently, English summer.
English summer. We think we've got 5 days of it this year. Let's talk about why you're here first of all. Let's start with that, and then we'll kind of rush into some of the projects that we need updates on. So, what are you hoping to get out of this? What are you hoping to hear?
Oh, I mean, I think you've covered this before. I think it's a good event if you're interested in the uranium space at all. It's kind of the granddaddy of the conventions. You know, it would be the equivalent of a Comdex or something if you're in the tech business. If that's still a thing in the various tech conferences of past. All nuclear industry, that includes the buy side, the utilities, the various other stages of the enrichment cycle, and obviously companies like us that are hoping to be producers, and the existing producers, of which of course there aren't many. Which is part of the reason that we've obviously got a tight market and an actually pretty interesting time to be here.
It's rammed down there. It's absolutely rammed. U.S. utility buyers are here. Compared to last year, different story, completely different story. Let's talk about the positioning of your company. Now, you've long said to me, we're ready to go when the market's ready to go. Can we start with U.S. projects? Give us an update first, and then I kind of want to talk about positioning your company for success going forward. So, U.S. projects, can you give us a run through?
Sure. Yeah. I mean, I think, we've been talking over the years, and I think this market is sort of playing out like I thought it would post-Fukushima. I mean, I think all of us in the business believed all of this would happen a lot sooner, that the market would tighten a lot sooner and what have you, but for different reasons that really didn't happen. And we obviously had COVID that caused disruptions of one sort or another. So we're sort of finally seeing that. We saw the initial kind of blast off, I guess it was 2020 or late 2020 when the market started to tighten up, when we had a $25 market, and we really had a big run up into late 21. And this felt like it feels like now, only it feels this time around that the market is actually tight. I think the spot price went from 25 to 65. All the companies like ours with, the next wave of production, we all tripled as well. And then everything kind of fell back. So we had a correction that's gone on now for, I don't know, till now.
Yeah.
Best part of 2 years. I'm a bit surprised the correction took so long, and that it's kind of taken the demand side of the equation. The utilities really kind of get on board that they really need to get aggressive about not only, securing production in the next sort of medium term, but really where's the production going to come from in, 2030s, 2040s. You build a nuclear power plant, it's a 60-year commitment. Sometimes now they're getting 20-year extensions on that. So the demand is, very, very visible. It's not model demand like you have in something like lithium.
Yeah.
It's real demand for the most part, other than maybe they add a plant or don't build a plant. So the demand side is very easy to model, and really where we have all the issues is the supply side. So
I think that's what we're seeing. We're seeing the nuclear report, which the guys put out. Well, I think it's officially released tomorrow, but we've got a little sneak peek today. Demand side, fully catered for. In fact, it hasn't really included much of the SMR growth story in there either. But yeah, that's there. Supply side, which I want to talk about in the context of your company, Laramide, as well. But hindsight's a wonderful thing, isn't it? You talked about, you thought it happened a bit quicker. So did we. But we've had COVID come along, supply chain issues, driving printing of money, inflation, Russia, Sput, all sorts of help that our sector has needed to kind of get it even to where it is today. So I'm not sure many people were calling it right in 2019 or 20, quite frankly. Not just you, me, everyone. Difficult times back then.
Well, I just think everybody that was in the business, I mean, maybe not if you're a utility buying $25 Kazakh uranium, maybe you thought that would last forever. But I mean, if you were realistic about the landscape in front of you, I think you had to get to a place where this mythical incentive price, whatever that is now, we used to say, I think it was 65. I'm thinking it's not 65. We could be 65 by Friday, right? So I'm thinking it's higher now, and we'll see. But I do think these kind of things had to fall into place. I mean, it's the slowest moving thing in the world, the nuclear business. nuclear plants do not sneak up on you. So the demand is there, and once it's committed.
Yeah.
But when they make an announcement, and part of the reason I think people that are investors in the space, they see these announcements, like they see a demand side announcement, and they're like, okay, well, the market's going to open the next day, and somehow or other it's going to be reflected right away. And it takes a long time.
Right.
And similarly on the supply side, because, you obviously saw this announcement over the course of the weekend from Cameco. And, companies are not really in the habit of making press releases on Sunday afternoon to Labor Day weekend.
Yeah.
In my experience.
Just before WNA.
Just before WNA. Well, I think obviously they can't come to the customers and without full transparency here. I think that's part of why they did it. And rightly so. But yeah, it just takes time for the market to kind of get this. The few people that have been in this, I mean, you've been following it for a long time. Like, there's been deep contrarians in this because the thesis kind of was what it was, and it was frustrating for the few people that flitted in and out. But when is this going to happen?
I know. I think no one was calling it right in 2019-20. No one. Let's talk about you and how you have conversations with the attendees today on the buy side, right? Because you're gonna talk the game of a soon-to-be producer. That's good news. A green producer, ISR, it's all good stuff. Green production. So where are you with those conversations? How do you frame that? What are they buying into? And in terms of timing and so forth, how do you expect the kind of near-term stuff to play out for you?
Well, I mean, I think from the standpoint of our company, we haven't spent a whole lot of time, to be honest, talking about utility things that might not have first revenue for 3 or 4 years or something like that, even in the case of the U.S., which would be the lead kind of project.
Because PA stage up there, aren't we?
Yes, yeah. But I mean, in the case of so we have 2 big chunky projects. We have a big ISR resource that will be an ISR methodology project in the United States, one of the biggest, 50+ million pounds, finally getting its first economic study. Yeah. And there are just reasons, for the technical reasons, that it took a long time to do that, just because of the provenance of the data, being American and not Canadian or Australian, where we have these regulatory regimes, 43101 and JORC, that, that kind of stuff is mandatory. And so we're finally kind of assembling and saying, here's the economics. It is what it is. It's an ISR thing. Here's where it fits in the peer group. So I think that from that standpoint, the utilities are going to perk up and get a little bit interested in that. We've also now done, we've gotten a grant from the DOE as part of our last part of the permitting process, which is going to be great because the impeccability of the data that's going to come out of Los Alamos obviously is not going to be scrutinized too heavily hopefully by the regulatory agencies and even people that are opposed to the project, of which they're bound to. You're never out of the woods with that thing when you're doing any kind of mining project now in a G7, G20 country. And then we have another bigger project in Australia that's further away because of the politics, but big and important.
Are we in Queensland now?
Yeah, it's in Queensland, yeah. But I think it's Westmoreland. It's a different style of project. It's a traditional kind of open pit, if you would, like a West African gold mine open pit.
Yeah.
That you'd be familiar with a smallish processing plant, and everything's kind of outdoors, so that your costs are not what they would be in like a Arctic environment or something like that, where you've got other costs that you have to deal with. So, the economics of that are very good. We've done studies on that. It's a well-known project, but it's probably off people's radar screen. Fukushima went on for a long time, So in terms of the impact and what have you. So there's probably lots of new fuel managers here. People are getting into the nuclear business.
Yeah, absolutely. And I think that's kind of the overriding theme of all the conversations we've been having yesterday, today. I suspect the rest of this week is the fact that the skill set just isn't there. In terms of certainly on the build side, for sure. In terms of even the buying side, it's kind of felt. I think initially I sort of revered these buyers as some sort of actuarial geniuses, and it just kind of feels like, well, maybe it's kind of, like the rest of us, kind of slightly winging it. It felt like, in terms of trying to understand how the market's going to play out, right? But now we're hitting their hard yards. What I'm hearing is supply is not necessarily going to be there when they want it. And perhaps these predictions from UXC, Trade Tech, and then for 2024 being the year where we're slightly depleted inventory levels, mean that these guys are going to start paying attention. I mean, do you agree with that in terms of supply?
Oh, I mean, the supply is obviously very challenged. I mean, I think because it's not vertically integrated. Like, there were times in the past when I think during the initial American build out, where the idea was a bit more, the General Electrics were building power plants, and they were, by the time the 70s was over, they were out drilling drill holes. So, they had an expertise in the company, so they had a lot more understanding of where the business was going and what have you.
Yeah.
You know, Westinghouse, similar things. The Japanese utilities, you know, found one of the deposits in one of these ASX companies back in 1979. Their exploration department, the exploration department of a Japanese utility. So that's the extent to which the business got integrated. And now I think you have, there's the demand side, there's the supply. Oh, the supply, yeah, we'll worry about that when we get to it. Isn't it great buying $25 Kazakh uranium? It's limitless. Yeah. And they'll find out that it's based on geology and it's not limitless. Yeah. And I think we're kind of at that point too. And there's always because it's a stair-step thing, this uranium price. Like, that's why people have to be patient, because it seems like it's doing that. But like the gold market's a bit like that. Like, it does nothing. Everyone wants to kill, slit the wrists. Yeah. And then the gold price will move $200 and they miss the whole thing. Yeah. So uranium's a bit like that. And you get this stair-step thing. And partly it's the psychology, because the demand side does have to react. Yeah. And they tend to react en masse, because it's, my analogy has always been they're a bit like portfolio managers that are closet indexers, and they really don't want to say that. But when someone else buys NVIDIA, they all go, I don't own NVIDIA, I better own NVIDIA. And so the uranium market is a bit like that. And I think what we've had that makes this moment seem different is you've had 3 supply shocks in a row in a very short period of time. You've had Peninsula that's been pushed out on a restart. Yep. You've had Niger, which, threatens, maybe not threatens, but I mean, no one knows yet. Yeah. We got existing production, but also there's future production that utilities think they're getting from a mine that's not built yet in the not too distant future. And then we had Cameco going, I know we're the best mining company in the world, but we're having some problems. Yeah. Yeah. And so the cumulative effect of this, I got to believe, is going to make for some interesting conversations at this conference.
I bet. I think the biggest of those obviously is Niger, because in terms of where it is, somewhere between 5 and 7% of the world market supply, and obviously the French are the most affected there. But the knock-on effect, the ripple effect of that is somewhat significant. And I'm talking to both companies, both listed companies operating in country today. From those time, how do you quantify the damage being done by not getting this resolved sooner? It's out of their hands. So they're playing a waiting game, not brilliant. I think the rest of the market got a little bit excited, right? It's green across the board. It's fantastic. You've had a good run the last couple of months as well. So I think, yeah, let's see how that plays out. I don't know enough to comment on that one. I think obviously Peninsula kind of got slightly curveballed by UEC there, somewhat.
But it's just a delay. I mean, it's a legitimate delay. I don't know. I mean, I'm not going into the nature of what the issue is. All I know is that if you were somebody expecting, I mean, they were in the ramp up to like, we're really going to produce.
They'd be producing today.
And they have utility contracts and everything else. So, I mean, that's just all I'm saying is that must impact the psychology of the person that thought they were going to receive material. Yeah. And then they get...
Exactly, I agree with you.
They open their email on Sunday and they realize, we had some Cameco deliveries as well coming. I mean, it's just the cumulative impact of all this stuff.
It's amazing. It's amazing at the moment. Yeah, I totally agree with you on those 3 points. It's must affect the psyche of even the brave. So again, coming back to you, U.S. market. Just sticking with the U.S. market. I'm trying to stay on focus here. Is U.S. market? We've seen a few things, and Peninsula is like one of those situations. That's a nice strategic move by UEC. Didn't need to do it. They're not going to fill it, but it makes life difficult for Peninsula. Maybe it could have been a heavily discounted company asset or company that they could affect. Who knows? Who knows?
I'm not going there.
Clever people.
Why they were doing it or whatever.
No, but I think my point is that the vagaries of the market, the ups and downs of mining, which is tough enough. There's lots of things going on out there. Do you, as a CEO with US assets in the economic study phase stage, do you have a view about how you play this? Are you setting it up for someone to come in? Because there's going to be more M&A. We're seeing it. Lots of M&A so far. We're going to see more of it. Do you say, let's put ourselves in the best position to get the best return now before we have to even think about funding this thing? Because that's where the pain comes. How do you play it?
Well, I mean, I think we're obviously, we were waiting for the signal. And it was, in a way, it was good that we waited a little longer because we had that huge move off the bottom.
Really well.
But I mean, I don't think I was expecting a 2-year check back or an almost 2-year check back on the price, because the price was back at 45. So those that didn't rush in and say, I got to be ready for the 2022 market or the 2023 market.
Yeah.
It's only coming now. I mean, if you were doing contracts and things. So, but I think this is it. It's really happening. So we're going to obviously move it forward as quickly as we can to get shovel ready, and then go build it. The beauty of having a...
But you're going to build it.
Absolutely.
Or if you got to say you got to build it.
No,
right?
no, absolutely. No, we have a very high caliber thing that you absolutely want to build, right? And I mean, it's within
you got the people to do it?
Within the peer group, it'll be a very good, profitable thing.
Right. Have you got the people to do it?
We've got some of the people. You're gonna, I'm sure we'll be competing with the rest of a very small pool of people.
I imagine. Yeah.
Knowledgeable people now. But I mean, I am hearing things that some of the companies that are doing things are pulling folks out of Kazakhstan and stuff, which is smart. And so, there's going to be people around. The engineering of building what you got to build, typically, particularly if you're building a plant or something like that, I think that expertise is around. I get the feeling, and I know from the Canadian perspective, that every big mining project we've done in any commodity in the last 2 or 3 years, the cost overruns, as I'm sure you've seen, are horrible.
Yeah.
And it's not any one individual company's fault. It's just that's the landscape you're facing, and I think so. You're facing that as well. The beauty of what we have in the U.S., though, I mean, I can't get out ahead of the study, whatever it's going to be in terms of the capex and things, but the nature of an ISR is, there's an initial well field. And there's a process plant.
Yeah.
And that doesn't add up to a giant number. Like, we're not talking Athabasca, it's a $1 billion thing. It's very small, manageable. So the risk is a lot lower. So the potential to build something like that is a lot better. And in terms of sequencing, that makes a lot more sense for us, because our Australian thing, and the politics will come good there one day, we'll be able to do that.
Get rid of Labor government.
But it's much higher cap. I mean, it's hundreds of millions of cap.
Well, absolutely. They're different, as you say. So the kind of exposure early on, pre-revenue, is not significant. It's better that way around, as what we're saying.
100%.
Yeah, okay. So you're prepared to build this thing out. You see the market that potentially the skill sets will be there, either to buy in, or we go explore new places to get the right people on board. What do you think in terms of being? Because when we first met, you're saying, right, okay, we are in the right jurisdiction. The U.S. market will come good. And if we look at the macro today, all the demand drivers are there. So forget government funding and incentivization, etc. The fact that this energy transition conversation is now front and center on everyone's lips. I want to be able to afford my heating bill in the middle of winter when it's snowing. People are driving government towards nuclear. And are you seeing any conversations downstairs, or as part of your normal run of work, of U.S. government departments or U.S. money getting more involved with U.S. projects? Is it a help?
Well, I mean, I think so. I mean, I think we just got a grant, which is interesting, and that was a grant we thought we were going to get earlier, and we didn't get it, and then, and then they called us.
Right. Okay.
And so we said, we want that grant, and but it took a long time.
Yeah.
But I would say that the current administration, they're kind of reluctly. I wouldn't say they're embracing it wholeheartedly. Yeah. I think they've, to some extent, been forced a little bit to, get into nuclear and be perceived to be very pro-nuclear. I think one of the real things that catalyzed everything was this whole SMR thing, because I think the company, I think it was the Bill Gates led company, I can't remember the name of it now, that had one of these SMRs, but they basically went to Washington and said, we don't have any fuel.
Yeah.
And what are you going to do? What are you going to do about it? So the Americans belatedly, I thought, said, well, we're actually really behind the curve here. And all these other SMR competitors, as you know, there's ones here in Britain and everywhere else, the designs, and the Chinese are doing it. And so I think the Americans have also started to realize, because now they're watching from a foreign policy perspective, and they're seeing that, China and Russia are back out using nuclear power and building power plants as an instrument of foreign policy. And so I think they're belatedly kind of getting it. So they're slow, but they're going to get there. But there's only so much they can do in America to get American supply to meet American demand.
Yeah.
So whether how far they go in that direction, who knows? You don't really need that. We're fortunate we have projects that don't need government subsidy to run.
Yeah. But when I hear it, I always asking, because it feels like it should be really powerful, it should be a real advantage, but it's just so glacial in its decision making, actually allocation of capital, maybe not so much. But what I'm interested in is the sequencing, word you used earlier, the sequencing of events. When we first met, you were tiny. I think you're only a little $30 million company. Can you remember those days? Can you remember that?
Yes, I remember Fukushima.
Yeah,
for a long time. We were a $700 million company once too.
But it's kind
with
of
fewer assets. By the
right,
way.
I know, but that's my point. There's a lot of moving parts. If I'm looking at the kind of the variables at the moment and what's happening on all of those, and then what you've also got to continue doing in terms of sequencing plan. What are the things that you think you got right, were timed right, or was it just a factor of hanging in there to be able to keep moving things forward? And just interested in terms of your psyche, of like how do you plan these things?
No, we didn't really plan it. Well, and I think I might have told you or other people, that was a long hiatus. And if you think, in a 10-year bear market, you don't get a message in the email going, well, there's going to be a 10-year market and prepare.
Right. Yeah.
It's 6 months at a time when it always seems like it's going to change.
It'll be fine.
And so
the gold guys now.
Yeah, whatever. So, obviously people that do what I do, we're doing other things. So I wasn't only doing this, or I probably would have been in a mental institution.
How's your handicap?
Yeah.
Is it good? Golf?
Not as good as Dev's.
Right.
He's a fantastic golfer.
Okay.
But I think he was a good golfer before the bear market, to be honest.
So you're sitting around. It's a case of like it is kind of that kind of stuff. Because I say that because I have a bunch of CEOs and they literally actually, your comment earlier was like, oh my God, I was going to slip my wrist out. It's like, man, this sucks. I'm getting depressed. I'm going to sell. I can't do this any longer. I'm not kidding you. Those are the conversations happening to me off camera, off screen, personal conversations where people are going, I don't know when this thing's going to end. You guys endured it for 10 long years, slightly longer, 12,
right.
11, 12 years almost. Were there moments there you thought, no, if I get the following right, I'm golden? Or is it a case of, crikey, if we just keep the lights on, our moment will come? How do you
Well, I think it was more the latter. And the reason we didn't become not a dot-com, but what other thematics went on in the 10 years, Bitcoin, marijuana, artificial intelligence.
Yeah.
We knew what we owned, and we knew where it fit in the universe of available projects that could create future supply. And, one of these things came from Rio Tinto, and the other one was drilled out by General Electric. So, we knew that these assets were important. So I used to dub us being in the survivor group,
yeah.
The people that made it through.
Yeah.
And by and large, you see the companies that are in the survivor group that are now at the top of the valuation order, they own the projects that make sense because they're real projects. And so we just knew that. So we were hoping, as I said, if I'd known it was 10 years, it might have been, who knows, it might have made a different decision.
Right.
But you always think, I can get I'll get it financed somehow. And we didn't have big burn rates. So we were fortunate because we didn't have a plant on care and maintenance or something, which are
But it's a case of you got to be in the game to play the game, right? So is that kind of mentality?
Well, you had to
right?
understand it.
Yeah.
And by the way, there were no M&A buyers for what you had.
Right.
So,
So coming on to that, it's like you knew you had like two quite good assets given the heritage where they came from. But I'm looking around the market now and I'm expecting to see the slew of utter zombie projects coming through like they did last cycle and trying to be able to identify what good and what not so good looks like. So, and I've got, CEOs said to me, well, that company, we were offered that asset, which is their flagship asset. We didn't buy it. That person didn't buy it. That person didn't buy it. And we're the only ones that have actually built companies any time recently. So it just shows you there's a lot of stuff which will kind of come through. And as an investor, which is my mindset, and anyone listening, is our mindset of it, how do I work out what good looks like and what not so good looks like? What do you think?
I mean, first of all, I think because we haven't talked about the ETFs, but I think the ETFs are kind of a selection process of, it's indirect because it's who's got market cap and who trades volume. But in a better market, those things happen because the companies have things that matter. And so that's sort of a self-selection thing where really the better projects by and large, are really in those ETFs. In some kind of weighting. We're towards the bottom compared to obviously Cameco and Kazatomprom, but there's quite a few companies in there that have development projects. And I think most of the real stuff honestly has surfaced unless there's some mystery thing that I don't know. There's a few things. Obviously we were in Mongolia, which I'm in no hurry to go back. There's a couple of big projects there and the French are talking about because they found something 15 years ago or something. There's potential in Mongolia, but it's not for juniors, I don't think.
No.
So I think most of that stuff is surfaced. I've been a big advocate of saying, I think this cycle you're going to have before it's over. I would think the frenzy will be more in greenfield stuff somewhere. There'll be some discovery that no one's thought about in some place that seemed sort of safe, or preferably in, Canada, Australia, or something like that. and then there'll be more of a flurry around that. Would be my guess. And I do think we need to do greenfield. Like as I was mentioning earlier, I mean, what it got to in that crazy cycle in the 70s is the people who needed the stuff had their own exploration department to find it. That's how bad it was.
The market's not doing the heavy lifting for you.
So is that going to happen again? I don't know. The energy companies, they were all in it before. The oil companies were all in it in the 70s. They haven't seemed to come back, but I noticed they're flirting around in the lithium business a little bit.
Yeah, I think the oil companies felt it was too small, very, very much not non-core for sure.
Too hard.
Too hard. And I think we talked before the show started about Exxon and the lithium space. We'll see what diversification happens and in the next few months or so elsewhere in this energy transition of ours. But I'm just conscious you've got places to be.
Yeah.
Thank you so much.
Great to catch up.
Glad things have
Always a
really moved
pleasure.
along for you. Share price is ticking along absolutely the right way. The projects are moving along nicely, and I suspect obviously access to capital shouldn't be too much of a problem as and when you need it.
Nope. The market's quite healthy at the moment for our sector, and let's hope it stays that way. And I look forward to coming back and reporting on our progress. All right. Cheerio.